Okay, we can start the class now, and I hope you guys still remember when we stopped in our last class. Today, I intend to complete capital allowance by the special grace of Almighty God. I intend to complete it today so that we can have time to look at some other complex topic in your syllabus. By now, I expect that every one of us would also have past questions where we are also looking at the exam trend, what the examiner requires of us. But it's okay if you do not have for now, but I'll urge you to have past question. Someone just joined. Aisha Tayola, welcome to the class. Good morning. So, that is that. So let's start our class. In my last class with you, we were looking at capital allowance, and I remember vividly that I told you that capital allowance is allowance granted to a taxpayer that has acquired qualifying capital expenditure and put same into production use at the end of the basis period. And I gave you some conditions for granting capital allowance. I said one of the conditions is that expenditure must be incurred after you have incurred expenditure. I also said for capital allowance, the person making the claim must be the owner of the asset. We said beneficial ownership is very important. We said, okay, purpose of use, it must be used for the purpose of business. I also said that. We also said usage or utilization. It must be used at the end of basis period. That means you must consistently use the assets at the end of the basis period. And we also said that where the asset value is more than 500K, the taxpayer must obtain an acceptance certificate. So in my last class with you, I told you basically we have two types of capital allowance. Okay, we have the initial allowance and we have the annual allowance. We also discussed in my last class assets acquired on second-hand basis. We said where an asset is acquired on second-hand basis, we have to divide it into two. We talk of building and other assets. We said where building is acquired on others, where building is acquired on second-hand basis, no initial allowance will be granted. The annual allowance will be granted shall be the lower of the original purchase price, original costs of the assets, and the new purchase price. Original cost of the asset and new purchase price. So that was what we discussed in the last time. We said, okay, for other assets, no initial allowance will be granted. The annual allowance will be granted shall be on the tax written down value. We move on in my last class to tell you how to calculate initial allowance. I said initial allowance calculated on cost. That means cost multiplied by the initial allowance rates. I give an example. Let us assume we acquire an asset costing us 500K, and I now say let's assume it is plant and machinery required. The rate of initial allowance of plant and machinery is 50%, and that will be 500K multiplied by 50%, giving us 250K. We left that. We move to annual allowance. We said annual allowance is the allowance granted to a taxpayer that has incurred qualifying capital expenditure and is granted all through the useful life of the asset. Meanwhile, we said initial allowance is once in the useful life of the asset. So we now said it is going to the cost minus initial allowance divided by N. Where this formula is used, where the basis period is equal to 12 months. We said AA could also be calculated where we say cost minus initial allowance divided by N multiplied by Y over 12. Where you use this method is where the basis period is less than 12 months. Okay. I also moved on to the next one. We said you need to understand that at the end of the useful life of the assets, your annual allowance shall be taxed in now value N minus 1 minus 10 naira. What is that 10 naira? 10 naira is the notional or residual value. Okay. Now, and I gave you some kind of relationship. What is tax now value? I said tax now value 1 shall be costs minus initial allowance minus annual allowance 1. Tax now value 2 will be tax now value 1 minus annual allowance 2. Tax now value 3 will be tax now value 2 minus annual allowance 3. Tax now value 4 will be tax now value 3 minus annual allowance 4. Now, in the last year of use, tax now value in the last year of use shall be tax now value N minus 1 minus AN. Okay, and I told you that in the last year of use, your AA will be taking now value N minus 1 minus 10 in the last year of use. So that's this. You can see that what we have just done here is to move this guy out to this place and and just substitute this for the last, because in the last year of use, your AE must equal to your taxable value of the previous period. Again, one thing that you need to also know is that your annual allowance is calculated on straight line method. So, which is a very straightforward computation. Now, having said this, Ayode Jokewale, you're welcome. And Ishi Rame, you're welcome to the class. You can move on. Olafison, Oluwatosin, Oluwatoyin. You are welcome to the class.
Thank you. Good morning.
Good morning. Now, I will say this. In my last class, we also spoke about basis period for assets allocation or for capital allowance. I told you the basis period under capital allowance is used for the purpose of allocating the assets to the relevant year of assessment. Is used in allocating the assets to the relevant year of assessment. So that means if an asset is acquired today, without the basis period, you will not understand the year or the relevant year in which you are going to allocate the assets for the purpose of capital allowance. And I say, take for example, if a company commenced operation 1/5/2023, and prepares accounts to 38 annually. So imagine an asset is acquired on 1/4/2023. Another one was acquired on 1/5/2024. Another one was acquired on 1/10/2023. And another was acquired on 1/7/2023. Now, because it's commencement, when a company commences operation, we have always said it, that the company that commences operation will be assessed with tax from the date of commencement to the end of the first accounting year. You said that in my first class with you. Now, if that is the case, all these assets that we acquire, we must allocate them to the relevant year of assessment. Therefore, I will say in 2023, in 2024 rather, my date of commencement is 1/5/2023 to the end of the first accounting year in 2023. In 2025, it should be 1/10/2023 to 30th/9/2024. In 2026, it should be 1/10/2024 to 30/9/2025. Now, we now begin to use this as a basis of allocating our assets to the relevant tax year. Now, you remember again in my last class, I told you any assets acquired prior to the date of commencement shall be deemed to have been acquired on the date of commencement. Right? So if that is the case, these first assets that was acquired before the date of commencement will be introduced here. The second one, which is 1/5/2024, where would 1/5/2024 fall? It will fall in this case, Abby. So it will enter here. 1/10/2023 will fall in this place. 1/7/2023 will fall in this place. So you can actually see when you are going to introduce the assets for the purpose of computing our capital allowance. So that is the reason we must understand the basis period for capital allowance. In my last class with you, we did a computation. So today, we are going to go straight to disposal of qualifying capital expenditure. Do you have any question? Faith, are you in this class?
Yes, sir.
You joined today?
Yes, sir.
You're welcome.
Thank you.
Okay. So as I was saying, we want to look at disposal of qualifying capital expenditure. You remember when I was teaching you the concept of trading profit and loss adjustments. I must have told you that profit or loss on disposal of QC, which is also fixed assets, is neither taxable nor allowable. You said it, that if you make profit on disposal, it's not a taxable profit. If you make loss on disposal, it's not an allowable expense. So if that is the case, and we know that we have acquired an asset, and we know that we have put the asset into production use, and we know that these assets that we have used it for the purpose of generating tangible income, then what would now be our experts? Excuse me. Someone was
Sorry,
asking me, yeah.
not hear what I thought you asked the question because network. I didn't hear what you said.
I didn't ask question. I just paused. So I now said that if that is the case, that profit on disposal is not taxable, while loss on disposal of asset is not allowable, then what is going to be the issue? How are we going to solve this problem? That was when the concept of balancing charge and balancing allowance was introduced. Let's move one after the other. What is balancing charge? What is balancing charge? Balancing charge will arise in a situation where your sales proceed is greater than the tax now value at disposal. Your what? Your sales proceed. You have disposed an asset, and the asset that you have disposed, you get the tax now value is not up to that. You know, ordinarily, when you're calculating your profits in your cost accounting or in your accounting, you will say profits will be a situation where your sales is greater than your cost price, right? But in taxation, that is not the case. In taxation, when you dispose an asset, your balancing charge that shows the profit situation will be when your SP is greater than your tax written down value. Okay, when your SP is greater than your tax written down value, then you can now say that your company had made profit on disposal. This balancing charge is recognized by the tax law that when your sales proceed exceed your tax down value at disposal, then you can actually use that as your, what's it called? As your profit. Okay. Now, so let's assuming an asset is acquired for 100,000 and subsequently disposed for 80,000. At the point of disposal, the tax now value stood at 35K. Required compute the balancing charge or balancing allowance. So we will say, you remember, balancing charge will arise where your sales proceeds exceed your tax now value at disposal, right? So I'll take my sales proceed, which is 180,000. You remember that we are not comparing this with our cost price. What are we comparing with? We are comparing with our taxable value at disposal. If that is the case, taxable value at disposal is 35K. If I subtract, what would I have? I would have 145,000. That would be a balancing charge. Are you following? But there is a restriction to balancing charge. To balancing charge. The restriction says thus that balancing charge can not be more than the total allowance claimed on the assets disposed. So capital allowance cannot be more than the total allowance claimed on the asset disposed. So how do you ascertain your total allowance on asset disposed? Total allowance shall be the cost price minus tax nominal value at disposal. If that is the case, so in this scenario, what is the cost price? Cost price in this scenario is 100K. What is terminal value at disposal? 35K. What is my total allowance on asset disposed? 65K. Right? And we are saying, is this 65K?
Yes.
So we are saying that your total allowance shall not be what? More than the assets disposed. Therefore, sorry, your balancing charge will now be restricted to 65,000. Will now be restricted to 65,000. But what were we supposed to get? we're supposed to get how much? Ordinarily, 145,000, right? So the question you will now ask me, Mr. Christopher, how many times did I call you? Also, you have called me 2 times. That what would happen to the difference between this and this, which is 80,000? Okay? This 80,000 shall be subjected to capital gains tax. Abi, because you remember that when you are computing your capital gains tax, you would always say sales proceed, which is 100K, must be greater than your what? Your cost price. In this scenario, your cost price is how much? 100K. Sales proceed is 180. 100K. So what will be your capital gains? Your capital gains will be what? 80,000. So you can see that the excess that we have restricted this by is the same thing as our capital gains. So in terms of computing tax liability, your balancing charge, which is taxable, will be surrounded with a balancing charge shall be subjected to 30% tax, while capital gains shall be subjected to 10% of chargeable gains. So that is that. So as I was trying to explain, as I was explaining right now, one thing that is very sure is that at every point in time, your balancing charge cannot be more than the total allowance claimed on the asset. Now, peradventure, your balancing charge is now more than the total allowance claimed on the asset. You must restrict it to the total allowance claimed on the asset. But my further analysis is now telling me that where this occurs, that variance between the total balancing charge and the total allowance claim on the asset shall be subjected to capital gains tax. Okay, so that's what I'm trying to say. Do you have any question for me?
So sorry, I didn't understand the capital gain
Why would you
side.
understand?
Like, I understand capital gain, but I don't understand like the explanation for this question.
Okay, let's explain. Do you understand where I told you there will be restriction of balancing charge?
Yes, 30% on tax.
Mr. Man, are you following me at all? Who can tell me what I said about restriction of balancing charge?
Okay, it should not be more than
the total allowance claimed on the asset.
So we said it should not be more than total allowance claimed on the asset, right?
Yes.
Now, in this scenario, the total allowance claimed, but our balancing charge was 145. Based on my explanation, I said your balancing charge will be the price at which your sales proceed exceed your taxable income value at disposal, okay? So which is 145. And I said, but no, to balancing charge has restriction though. Your balancing charge cannot be more than the total allowance claimed on the asset disposed. Now, and I said, how do you calculate your total allowance claimed on the asset disposed? I said, that will be the cost price of the assets less the taxable income value at disposal. So, which of course is this? So we now said, at every point in time, your balancing charge shall not be more than total allowance claimed on the asset, which is 65,000. But the question that will come to mind from you guys is that how would the tax authority treat the 80,000 balance? Now, there's a difference between your total allowance on the asset and the actual balancing charge that you got. because it should be more or less like the taxpayer is making profits that is not subject to tax. But that is not the case. We are saying that that variance, which is 80,000, is capital gains tax. It's capital gains, which shall be subject to tax at the rate of 10%. I was now trying to also explain to you that how do you calculate your capital gains tax? We say your capital gains shall arise where your sales proceed exceed your tax noun value at disposal. Okay, your sales proceed exceed your tax noun value at disposal. Then you'd have what we call capital gains, and that capital gains shall be subject to tax at the rate of 10%, while the balancing charge, which is according to company income tax, shall be subject to tax at the rate of 10%. That is what I explained. We'll move on to the next. Balancing allowance. What is balancing allowance?
I have a question.
Yeah. Go ahead.
Okay, I think from this scenario, I think the balancing charge is it 80,000 naira?
No.
Okay, 65,000 naira.
Yes.
I think the total allowance is 65,000 naira.
I'm coming. Let me open my. I want to open my screen again. Hold on. Where is my white marker board? Let's see it again. Hold on, just hold on for me. Today is 16. This one. Okay, ask your question again. Ask your question again.
Okay. Is that from the solution you made, I thought the balancing charge is 80,000 naira.
Are you following me at all? How do you calculate balancing charge?
Okay, I think balancing charge is selling price minus the total capital allowance. I don't know, maybe I'm right.
Someone else should help us out. What did I tell you that how to calculate capital balancing charge? Someone should help me.
Balancing charge is the excess of sales proceed over the tax written down value at disposal.
Thank you. Right? How did we get the 80,000? Your 80,000 is sales minus cost price. Okay? So, do you understand what I'm saying?
Yes. For now, I'm okay, sir.
Okay.
Okay.
So, for balancing allowance is a situation where your tax written down value at disposal is greater than your sales proceed. Okay? So let us assume the cost of an asset is 150,000. Tax written down value at disposal, let us assume, is 90,000. Let us assume sales proceed is 35,000. So to calculate our balancing charge, balancing allowance, we say sales proceed, how much? 35,000. Less costs your target now value at disposal. That is 90,000. If I subtract that, I will have balancing allowance of how much? 55,000. Okay. So this 55,000, what would you do with it? Are we going to restrict it by us saying cost minus something? We are not doing that, because for balancing charge, balancing allowance, it is an additional allowance that the taxpayer will claim. Okay, it's an additional allowance. It's an additional allowance. So taxpayer would always claim this additional allowance as part of the allowance they have. Okay, so there is no restriction. Invariably, what I'm saying is that there is no restriction to balancing allowance. Okay, so that is that. Let's look at an illustration. Let's look at an illustration. Hold on. How many of you have my textbook? How many of you have my textbook? Mr. Hussein, do you have it?
It's the old edition, sir. That's second edition. Second edition.
That one, no.
That's why I say old edition. That's why I say old edition.
Mr. I have been looking for that second edition, Mr. Hussein. Can you give it to me? I'll give you the new one.
Okay, sir.
You just speak that.
I have second edition too.
You have second edition.
I have second edition. I have second edition.
I only want to do bonanza for one person.
I have.
Okay, sir.
Bonanza
I
for
even got it
I don't
immediately
win
when
the
it was
bonanza.
out.
When did you buy it?
So I bought mine last month, sir.
Last month, second edition.
Yes, sir.
Second edition I did it since 2024. Also,
I bought it last month from Mr. It was Mr. I spoke to Mr. the SFM lecturer. He was the one that bought it from.
That is not second edition now.
The real second edition
I
on the top.
bought it 2022.
So how much is the textbook? The SFM lecturer cannot sell 2022.
Oh, sorry. It's fourth edition. I was looking at. Sorry, sir.
Like.
It's fourth edition, sir. Sorry.
Fourth edition. That means you have the latest edition.
I was looking at something else.
I have the second edition.
When you do by 2022?
Yes.
Okay. Mr. Hussein to also have second edition. So, Mr. Hussein, when am I getting second edition? So that I can check it for.
Okay, maybe I'll be at the island Monday, Tuesday. Maybe I'll call you to locate it, sir.
Okay, no problem.
Yes, sir.
You'll give me Jara.
No,
all right. Okay.
Yes, sir.
If you have the second edition and you have whatsoever edition that you have with you, go to where you have capital allowance, illustration number 12, Aisha sheets.
So how much is the book, sir, and how can one get it?
The book is 16,000.
Tax, right?
16,000.
Is it tax?
Tax, yes.
Okay.
It's 16,000. If you're in Lagos, it's easier. You just come to our center to pick it up. I have very few copies left. I only have 20 copies left. I did 1,002 last October last year. I only have 20 copies left now. Okay. So if you have the book, can someone help me snap that Aisha sheet? For you that are requesting outside Lagos, I will give you the number of my vendor. It will make an arrangement with you. If you have the tell you, can you snap the question to the page to our WhatsApp group? Mute your mic if you are not asking to mute your mic. Who is that? Yesterday, Olawale, mute your mic. Yes, it's covered in the syllabus of ICAN. Okay, if I do not see anybody to help me, I will help myself. So, where are we? Advanced tax online. Yes, thank you, Mr. Hussein. How can I get within Lagos, sir? To get it within Lagos, where are you? Where are you? Where are you exactly? Okay. Thank you, Mr. Hussein. Okay, let's read the question and let's solve it. Let's read the question and solve it. If you are there, I'm there. Mr. Hussein, read for us.
Okay, sir. Aisha Ship Nigeria Limited commenced business as a trading company on 1st of April 2023. The result of the company for the first 5 years of commencement of business were as follows. It has all the figures assumed correct. The company acquired the following content.
Hold on, Mr. Hussein. Let's go to some other discussion. You see, capital allowance is treated differently. If a company is a trading company, and if a company is a manufacturing company and agricultural company. For a trading company, capital allowance is restricted to 2/3 of accessible profits. 2/3 of accessible profit, which is the same thing as 66 2/3% of accessible profit. Okay, illustration. Assume your capital allowance is 100K. And your assessable profit is, let's say, 60K. Okay, so we said capital allowance is what? Restricted to 2/3 of assessable profit. So that means at every point in time, your capital allowance cannot be more than 2/3 of assessable profit, or 66 2/3% of assessable profit. So what is 66 2/3%? Let's convert 66 2/3 divided by 100. That's what it means. So, firstly, I can actually say 66 2/3 divided by 100. Now, 66 2/3 will be 200/3 divided by 100. Have you? So, for us to convert improper fraction to a proper fraction, what do we do? So we have done that in this scenario. But you remember, if you have division, it will turn to multiplication. When you want to turn it to multiplication, it will change position. So it will now be 1/100, right? So it will now be 1/100. So it will now be 200/300 multiplied by 1/100. So by the time I say this cuts this, I will have 2/3. So that means 2/3 is the same thing as 66 2/3%. Okay, so note that and be good. Now, having said that, that means at every point in time, your capital allowance, if it's a trading company, shall not be more than 2/3 of assessable profit. Therefore, what's my assessable profit in this question? My assessable profit is 60,000. More than 2/3 of 60,000. That will be 40,000. Even though I know capital allowance brought forward, how much did you bring forward? Is 100K. Let me show this back. So, brought forward, or for the year, is 100K. We now said relief for the year. To relieve, the maximum you can relieve is no more than 2/3 or 60,000, which is 40K. Carry forward will be 60K. I'll come here, I'll take my 40K out. So my total profit will be 20K. Okay. So this scenario that I've painted for you is when a company is a trading company. However, when a company is a manufacturing company or agricultural business, there is no restriction. No restriction. By implication, provided the assessable profit can carry it, you can take 100% of the capital allowance. But if the assessable profit cannot carry it, you can take all the assessable profit and carry the remaining forward. So let's go. The same scenario, but in this time it is a manufacturing company. So assessable profits 100K, capital allowance for the year, how much? That is 100K. So this is 60K from the question. 60K. So there is no restriction to the amount of capital allowance that you can claim. But however, in this scenario, you cannot take more than, you can't take more than what? The profit. No, there's no restriction for manufacturing.
Okay.
So I'll just say I can take the entire profits because there's no restriction. I'll just say 60,000. Carry forward 40,000. 60,000. My total profit, nothing. You can see the two scenarios. In the first scenario, because there is restriction to capital allowance, we're able to pay tax on our total profit, which gave us 20,000 as total profit. But in this scenario, there is no opportunity for us to pay tax. Why? Because the company is a manufacturing company. And for a manufacturing company, the Act provides that you do not restrict the capital allowance of a manufacturing company. So when you are given a question, the first thing you need to know is the nature of the business. In November 2024, examiner gave a question and they specifically said that company is a manufacturer of industrial crop. That means the capital allowance of this company will not be restricted. So that's how you know. So examiner will introduce the question and tell you the nature of the business for you to know the applicable rule for such a company. For you to know the applicable rule of such a company. So that is that. So let's go ahead. Now that we know the restriction, we can go ahead. They told us that this company is a trading company. So let's go. Read the question further.
Okay. Should I start from beginning again?
Go ahead from where you stopped.
Okay. We assume other figures are correct. The company acquired the following qualified capital expenditure. The capital expenditure is done. Okay. And the industry building was sold on 4th of August 2025 for 18 million naira. Require 1. Compute the capital allowance claimable by the company for all the relevant years of assessment. 2. Compute the balance charges / balance allowance, if any. 3. Compute the tax liability payable by the company for the relevant year of assessment. 4. If the company is a manufacturing company, will your answer be different to what you have in one above?
Okay. So they are trying to test your knowledge of what? Manufacturing and non-manufacturing business. You understand? Now, when you have a question like this, the first thing you must first do is for you to do your asset allocation schedule. Okay? So what is the name of this company? Aisha Shifts Nigeria Limited. Okay? I will say preparation of assets allocation schedule for 2000. Now, how do you identify the relevance here? How do you identify the relevance here? This company is just a commencement company. They are just commencing, right? And because the company is just commencing, it is very essential that we apply the commencement rule. And when you apply the commencement rule, you will look at the profits that you are given. The profit we are giving this question ended when? 2027. Abi Alaji, Mr. Hussein.
Sir?
The profit we are giving this question ended when?
2027. That's 30 September 2027.
By implication, when will that be assessed to tax?
That
2028.
2028.
2028. So we know where to stop. Now, again, when you are dealing with question of capital allowance, you must be very careful because apart from using profit to determine the relevance here, okay, you must also know that you can use assets acquired or disposed to determine the relevance here. Now, in this question, they told us the last asset that was given to us was 2025, isn't it?
Yes.
And the last asset that was disposed was 2025. So we will not have issue if we use the profits to determine the relevance here. But imagine we have an asset that was acquired or disposed in 2029. That means our relevance year we have to extend. Okay? But in this scenario, that is not the case. Having said that, now this company commenced business when?
1st April
2023. 2023 April.
1st April 2023. And it's a company that just commenced operation. So how do you treat company that just commenced operation?
Date of
From the
commencement
commencement date
of first.
to the first accounting year.
So,
First accounting year.
which is 30/9/2023. This period, when would it be assessed to tax?
2024.
2024.
Solid student. So we know that it's going to be 2024 to 2028 years of assessment. Okay. Now that we know. Now that we know. So these are answers that we all schedule. I will say tax here. Basis period. And QC. In 2020, our base period was 1/4/23, 30/9/23, 2025, 1/10/23 to 39/24. In 2025, it will be 1/10/24 to 39/25. In 2027, 25. right? So that's our base period. Now we'll now begin to look at the asset they acquired. You remember, any asset you acquire prior to the date of commencement will be deemed to have been acquired.
The commencement date.
Thank you. So the first asset that was acquired 1/2/2023 will be introduced when?
In 2024
Four.
tax year.
24.
The second year one was acquired on the date of commencement. The third one was acquired 4/7/2024. Where would that be?
2025.
The next one, 7/7/2024, 2025. Where would that be?
2026 year of assessment.
The next one, 10/7/2025. Where would that be?
2026 year of assessment.
20,
The asset that was disposed, where would that be?
That's it. Okay. Okay. 2026 year of assessment.
20 what?
26 year of assessment.
So, which asset did we dispose?
Industrial building.
Industrial building.
So we are good. We now know where we are going to introduce the assets, one after the other, right? Good. Now that we are good, we can now compute our capital allowance. Because the examiner said, compute the capital allowance. That's number one. What's the name of this company? Aisha Shifts. Computation of capital allowance for 2024 to 2028 years of assessments. So I'll say QC which look at how straight my hand is. I have not used my hand for batting. Some of you cannot draw straight line. Aisha, can you draw straight line?
Yes.
Okay. Let's assume we are saying the truth. We are just assuming. Sharafat, Sherry, or Sarat, can you draw straight line? You can give you the board. Okay, you have used your hand for batting. So, but look at my own man. You said no. You have used your hand for batting. Straight hand. So, if you are going for exam, take your ruler out because some of you, your hand is not straight. I remember when I used to write ICAN, I don't go with ruler because in my book, my hand is always very straight. I don't know why it's not straight here, but don't worry, I have not used my hand for batting. Trust me. So the first asset is industrial building. Second one is plant and machinery one. Third one is furniture and fitting. Next is plant and machinery 2. Next is motor vehicle. Oh, the last one is capital allowance. The examiner will give you the rates. Do not cram. Initial allowance and non-allowance rates. This is 15%. And 50, 25.
Please, do they give this rates in exam or we have to cram it?
No, don't cram. They'll give
Professor,
you. Examiner will provide it.
So what if they now tell us to have crammed the rates before coming to class?
Is it the first time we are writing this exam?
Okay. I don't think I can.
No, they can never do that. They can never do that. They want to kill people. I mean. They won't do that. Don't worry. So, in the first year, which is 2024, I mean, you write the basis period. The first asset that we acquired was industrial building, and we acquired for 12 million. Because look at that was the first asset. The second one in 2024, the second one is plant and machinery. That is 4 million. So on the new one, this is the cost. You need to calculate initial allowance. Initial allowance, 15% of this, what do you have?
$1,800,114.
The second one, 50% of the cost.
$2,495,000.
Just press this kind of question, just come out.
Oh yeah, now give me my answer.
2,495,000.
2 million for
495,000.
add the two together, what do you have?
$4,295,114.
What do you have?
$4,295,114.
The next one is annual allowance. How do you calculate annual allowance? Annual allowance shall be cost minus initial allowance divided by N. multiply by y over 12. Why are we using y over 12?
Because of the period it started. It didn't start on the beginning of the
Okay, because it's less than 12 months.
Mm.
So what do we have? For industrial building, that would be minus
5 million.
wait, how many years?
100 and
How many months is that?
6 months.
6 over 12. What do you have?
5 million 100 and 5 million 100,000 and 323.
Like that.
Sorry, sir. How did you get N as 10?
For building, it's 10 years.
Okay, but I'm not seeing it in the question.
Ha.
Busy.
Who is that?
I'm using my eyes.
Who is talking?
Emmanuel.
Is there for annual allowance rates? The rate for annual allowance.
Oh, yes, yes.
Aisha, are you the one saying this?
Okay.
Aisha, you're not correct.
It's not 10 years there. Okay, that's percentage, sorry. That's percentage, sorry.
Good. So I told
So
you get
uh,
your end by saying annual allowance rates. 100% divided by annual allowance rates.
Divided by 10%. Mm.
You guess that's how it goes.
Mm.
100% divided by annual allowance rates.
Thank
Oh,
you,
yeah,
sir.
give my give my value.
510,000 is 0.33. 510,000 is 0.33.
What about AA for plant and machinery 1? What are our costs?
Land and machinery.
Cost is
Plants,
400.
okay.
How many years?
4 years.
Multiply by 6 over 12. What do you have?
311,875.
So we bring it in 311,875. What about the first one?
510,032 naira
That is what I did.
is 32.3, so 32.
Add it. What do you have?
Eight hundred and 21,907.
Add what do you have?
500 511 7021
Okay, 5
11 7021
2.
7021.
Okay. Like this.
Yes, sir.
Yes.
Good. The next one, 2025. Give my tax free now value. Ayodeji, okay, Wale, you have not spoken to this class. What's up? I want to hear your voice.
Sorry,
Iman,
sir, I was trying to amuse myself.
it's fine, no issues. You are welcome to the class. Mohammed,
Thank you, sir.
Emmanuel Saba. Yeah, Emmanuel Saba. You are new in the class.
Good morning, sir.
Good morning, how are you?
I'm fine, sir.
Okay.
Pin down value for industrial building
Is that
9690614.
96?
Is there? You didn't come back with me.
Then
The next
for
one.
Two 3125.
Did we acquire any asset this year? Yes. We acquire from traffic. How much?
Sir, 2.4 million.
2.4.
F&F, sir.
Okay. On that new acquisition, 20. What is the rate for furniture and fitting? 25%. So 25% of 2.4, what is that?
Is 1.2, sir.
We gotta wake up. 25%.
Is 600, sir.
600,000.
600.
AA. Now, for AA, because the year is full, is more than 12 months. What do? You remove the proration. Okay? So give me the numbers with that proration. Without prorating this, what would it be? Without prorating this one, what would it be? Without prorating this, what would it be? Yeah,
360, sir.
Which one is 360? Okay, I've calculated this one. 360.
360.
What about this one and this one?
Sir, are you talking about the first one, the building and the plant? Okay, 510,000 is 032.
No.
For
Wait. You do not need to prorate the second year because that one is full year. Do you understand?
Yeah.
Okay,
you
sir.
do not need to what? Prorate the second year.
I don't need to prorate. Wow,
yeah,
this is serious.
That's full year. The base period is 12 months. So what do you have if you are not prorating? What do you have?
102006
For
the first one. 1020.
065.
What about the second one?
$623,750.
Addition of addition.
$2,003,755. 2,003,755.
Sir, sorry. I got 2003815.
How does it go out? We have 2603. 2026. What is my tax now value? Give me my value.
Eight six seven zero five four
What do you have?
8670549.
The other one.
One 559,375.
No, we don't know how to press calculator. Check it again.
One 559,375. 1559375.
One, 4.
1559375.
Can someone else check? That's what I have.
What I got.
That's what I have, but that's what you wrote is what is it in the textbook.
Okay, that means the one in the textbook is not correct. So you
The
said
answer
you
is
have
1559.
1559375.
1559375.
9375. Yes.
Is correct? If you are cool
It's
and
correct,
cool.
sir. It's correct.
So what do you have for this?
One for 1,440,000.
Do we have for this? No. Did we acquire assets this year?
Yes.
Plant and machinery 2 and the other one. What is the value? First one is 10 million, the second one is 5 million. On the new acquisition, we calculate your initial allowance. What is my initial allowance?
5 million naira. Abi?
Yes.
So 5 million naira.
Annual. Now, when you dispose an asset, that asset will not qualify for capital allowance. So they told us that we dispose industrial building when 2026. So I will take the entire I will take it out. This one, the annual allowance will remain constant. This one, the annual allowance will remain constant.
So sorry, you are writing it on the disposal line.
Thank you. Calculate the annual allowance for this true.
1,250,000, sir.
$6 million, 6,000, 625,000, maybe. Add everything together, what do you have? What do you have? You can't add.
Sorry. 2,858,750.
Total 2027. Tax now value. Nothing. What will the tax now value for this guy? Tax now value for this guy.
Sir, the total for the capital allowance is 1,035,8,750.
What's capital allowance, annual allowance for this guy? Nothing. We have disposed it. What's the tax now value for this guy?
Sir, is 935,625.
What's the
The one is 1,080,000, I think, yes.
How about this one?
3,750,000.
What about this one?
What me done? Probably not put them this thing no inside again now. The same card. No, I Jeda.
I think there are files inside.
Virus.
Files. Plenty files.
About
The
the
7530.
So now this is the last year of use for plant and machinery. How do I know? It has used year 1, year 2, year 3. In the last year of use, you must retain 10 naira. I will remove 10 naira from this value. This one will remain constant. This remains constant. This remains constant.
Sir, the annual allowance of that plant and machinery is not the same as TWD visa. Look at it again, sir.
Because we need to retain 10 naira.
So sorry, I wanted to ask that is it not the next year will now retain the 10 naira?
No. I decided to close it this year. AA. Nothing. AA for this one is constant. AA for this one is constant. And AA for this one is constant. Nothing. And 360. 125. 625. So whatever you get, you put it here. So that will be the end of the capital allowance. We are not done with this question. We are not done with this question. So when we come in the next class, we will continue with this question. So just fill up the capital allowance because we are going to use this question next class. Any question?
Sorry, the notes.
We can't hear you.
Sorry, it must be network. I was asking if we will get the note soon.
They'll send it to you. Oh yeah,
Okay,
who
sir.
usually help us download this note? Send it to the class.
Okay, I'm sending it now.
So good day to you. That's the end of this class. So we meet again next week Saturday.